Welcome to Business Insights Daily. I'm Shashank, and today we're diving into what might be the biggest capital rush in modern history, the generative AI investment boom. From Wall Street to Silicon Valley, companies are betting big. Goldman Sachs estimating that business investment in AI will surpass $1 trillion in the coming years. Just this month, OpenAI raised another $6 billion, bringing its valuation to astonishing $157 billion. Nvidia, not to be done, is reportedly preparing to invest up to $100 billion into OpenAI's next generation of data centers, a collaboration that Bloomberg calls part of a web of circular deals driving the $1 trillion AI boom. But behind the excitement, many are asking, is this massive spending spree justified, or are we inflating the next big tech bubble? The $1 trillion question. Generative AI, the technology that powers models like ChatGPT and Google Gemini, has captured the attention of both corporate strategists and governments. Gartner projects that worldwide AI spending will hit nearly $1.5 trillion in 2025 and exceed $2 trillion by 2026. The reasons are clear. AI promises to revolutionize industries, from automating legal work to designing hardware and managing logistics. No one wants to be left behind. This fear of missing out is what's fueling a corporate gold rush. But there's also fear of the other side, the fear of reputational or legal risk if AI is applied without oversight. This dual tension is what's accelerating spending even faster. Let's talk about the star of the show, OpenAI. The company closed a $6 billion funding round this October, and its valuation now sits at $157 billion. For comparison, that's higher than the current market cap of Ford Motor Company. This surge reflects investor confidence in not just ChatGPT, but in the infrastructure behind it. Vast data centers, powerful GPUs, and energy contracts worth billions. Nvidia and AMD are both reaping enormous profits from supplying the chips that make AI run. However, as Harvard Business Review notes, this market is becoming an increasingly complex and interconnected web of business transactions, where money circulates between the same handful of tech giants, OpenAI, Microsoft, Nvidia, and Oracle. That's a red flag reminiscent of past bubbles. Investors are still waiting for the killer app that proves generative AI's true staying power. While ChatGPT and Microsoft Copilot lead the field, monetization remains tricky. Users love these tools, but converting free interest into paid subscriptions is a different challenge. So far, adoption is exploding. Stanford's AI Index report notes that over 70% of businesses now use AI in at least one process, nearly double the rate in 2023. Still, profitability lags behind. Many startups remain dependent on venture capital rather than self sustaining revenue. All this innovation comes at a price too, a literal one. Training and running advanced AI systems consumes enormous energy. Microsoft signed a $16 billion deal with Constellation Energy, sourcing power from the old 3 Mile Island nuclear facility just to keep its AI services online. Morgan Stanley projects that AI-related power could demand triple carbon emissions from data centers by 2030. The irony? AI is helping model climate solutions while simultaneously straining the planet's resources. Analysts remain divided. Forbes warns the AI bubble could wipe out as much as $40 trillion in stock market value if optimistic turns to panic, drawing parallels to the dot-com crash of 2000. Yet Goldman Sachs insists the fundamentals are stronger this time, as companies actually see measurable productivity gains from AI integration. In fact, the World Economic Forum estimates that generative AI could add up to $7 trillion to the global economy by 2030 and boost U.S. labor productivity by nearly 1% per year. That's why major banks, chip makers, and governments continue to pour billions into the sector, bubble fears aside. So what's next? Frenzy isn't slowing. Private investment in generative AI toppled $33.9 billion in 2024, nearly 9 times higher than in 2022. With tools like ChatGPT, Gemini, and Cloud expanding into new territories from media to medicine, it's clear this wave isn't crashing anytime soon. Still, experts caution that 30% of enterprise AI projects will likely stall or fail within 12 months due to primarily unclear ROI and massive operational costs. The challenge for businesses now is not just deploying AI, but doing so sustainably, profitably, and responsibly. As we wrap up, one thing is certain. The generative AI boom is already reshaping the global economy. With over $1 trillion in play, the stakes have never been higher. Whether this becomes the foundation of tech over the next tech era, or the spark that ignites another bubble, only time will tell. Thank you for listening to Business Insights Daily. I'm Justine, and stay curious, stay informed, and see you next time. Thank you.